Okay, people, so it's another week. We're expecting the market to resume in a couple of hours. Let's see how long it's going to take the market to resume. Yeah, so in 5 hours and 50 minutes. We're supposed to start at 4 o'clock. Sorry for the delay. If you're new to the channel, I'd like to say please hit the subscribe button, join the channel, join the move. I want to blast you up with something I designed. This will be the new intro page going on from here on out, where we will put the last videos up here and then do well to subscribe to the channel for a start and make sure you join along for the journey. So we're starting this week with what we expect. Now we still have about 1 day left with the Edge Finder 2. So let's play with it immediately. I hope my voice is clear. Let me check the chat room. So I really hope my voice is clear. Yeah, I think so. I think it is clear. Well, anyways, so let's just go ahead. The Edge Finder 2. So this is where I stopped. I stopped something called the Forex scanner, right? This is something that you can use to scan the markets. And take notes, the Edge Finder 2 doesn't just take out fundamental analysis that you need to go through. Instead of you having to go to forexfactory.com or like myself, I recently have been using investing.com and having to go look at the calendar and acquaint yourself with it, try to find out what's coming on for the next week, all that stuff. Yes, you still need to do all of those, but instead of going back to go look for previous week's situation, previous month's situations, you could as well just quickly come down here to the Edge Finder. And the good thing about the Edge Finder is it has input the data in, that is one, but it has also, calculated the data for you. So this is what I'm going to start with today. The Edge Finder, we only have it up until tomorrow. So you can see right here, 30th. If you didn't get the free week, I'm sorry about it. I announced it in all the videos I dropped this week. For those of you who have been watching my videos, if you've not been watching my videos, well, so that you don't miss it, do hit the subscribe button and also hit the notification bell. That way, you don't miss when I give you updates like this on the market. So, diving straight in, what do we see on the top setups for forex traders? Well, so right now we have a lot of things to look out for. But even trader Nick himself, he only considers things that are from 6 and above or -6 and below. So we have 1, 2, 3, 4, 5, 6, 7, 8. So 8 markets in total to actually look out for trades in terms of what the Edge Finder is saying. Now, I know a lot of people will be asking, hey, what about your Trade Finder too, your own Trade Finder? Well, this is my own Trade Finder here. My own Trade Finder is looking at a total of 10 financial markets where the fundamentals are heavily leaning towards one side. So, uh, unlike the Edge Finder, right? Unlike the Edge Finder doesn't just look at economic data. So my own Trade Finder only looks at economic data. This also incorporates the technical situation of the market, meaning seasonality and the current trend of the market, as well as the sentiment of the market. So COT as well as retail positioning. So retail positioning is for contrary traders, people who want to, counter trade, people who want to trade against the retail traders. And then COT is for people who want to trade with, who want to trade with the big traders, the hedge funds and Berkshire Hathaway's and the rest of them. I really hope my vocals are clear in this video. All right, so without further ado, let's get into it. We all know the euro US dollar is crazy, crazy bullish. Matter of fact, I think I'm going to start by clearing out everything here. Let's just go straight to the euro US dollar. You can see it's top of my list here, but I can't trade this thing yet in the mid time frame. So another thing I discovered this week is with the amount of capital I can be able to make, right? The amount of capital I can actually bring up if I want to really start trading with my own cash. Because you can see here, it's a demo account. If I want to trade with a real account, the amount of money I can bring up is not enough for me to be a swing trader. So I'm going to learn the whole thing, yes, both on the higher time frame, lower time frame. But if I'm going to start trading at all, it has to be scalping because of the capital I have. Take note, with scalping, I can then scale up that capital and move up, but also you can quickly lose your capital. So it is not financial advice if you have small money to go and trade. $10 is not for trading, $20 is not for trading. For me, I already have a very fair amount I would mention on this place that would be good enough for me to start trading with. And if possible, get a prop firm account alongside with it. But until then, we're still pushing the stuff. Now, what are we looking at here on the Euro US dollar? The Euro US dollar, make that full screen. What we have here now, I was explaining. I released a video recently where I explained market structure and how to actually draw market structure. So this is it. On the monthly, this is what we have. We have this situation. So price hasn't broken above or below this location. Hence, on the monthly, we can say we don't even know the direction of price based on this chart. But if we head into trading view, right? We head into trading view and we go just pull up any random charts of euro against US dollar. So let's just pull up a random chart. If we pull up a random chart of the euro against the US dollar and we go down into the monthly. So over here, we can draw a better view of the monthly situation. Right here, we can draw the better view. Unlike what we have here. So what we have here is my broker, it's Xness. And they don't give so much data when it comes to all that. They cannot access so much data. The data stopped somewhere around, if you look at compare the two charts, the data stopped somewhere around here. So if I should pull a line somewhere around here, this is where their own monthly data stopped at. And with trading view, you can go a whole lot further. So on the monthly, I'm just going to use this for the monthly view, right? So on the monthly, we can draw this structure right here. Now, surprisingly, people are going to look at this as structure. I'm going to come back to that, but that's not structure. There's a low here, there's a high. Price hasn't broken, price broke it. Yep, right there. So over months and months and months of data, that is years of data, we've seen a bearish trend. Allow me use a quick tool to show that. Where are my tools? I think I haven't been to TradingView for so long that I don't even know where some tools are anymore. All right, there it is. So overall, we can say this has been the situation for the euro US dollar in the recent years. So it goes up, yes, but it still goes down even more than it goes up. So this has been the most understood trend. So what are we saying in terms of monthly? Well, people rarely trade monthly, but in terms of monthly, until this high is taken, price remains bearish, right? So now we can hop back into this place because there's a lot more data here now at this point. So the weekly, right? In the weekly, we can now start from wherever we stopped. Right, we can start from wherever we stopped. There are a lot of small structures inside here, which will be your daily structure. But what you can clearly see here is price did this high. All of this is consolidation, right? All of this is consolidation. This would have been like a good place, though the price went back in and finally did a clear break here. Now we are here. So in other words, we are somewhat bullish, somewhat, right? Somewhat bullish after breaking this high on the weekly. So being somewhat bullish on the weekly, what should you be looking out for? Now this is the funny thing. It means you should go back to the monthly and start looking for structure. This is a supply zone on the monthly, and even the weekly we are heading bullish, right? If you're a swing trader, you shouldn't be buying at all here yet. You shouldn't, because it's now getting into the risky zone. Why? So if we draw the fib retracement from here to here, you're already way into the premium zone of this entire run. You're way into the premium zone, and buying here as a swing trader, that's dangerous. That's really dangerous. Though there is this low as a supply zone, right? This is still your weekly supply zone, right? This is your weekly supply zone. And if you go down to the monthly to look for big brother, small brother situation, you do have one here. But you see, this is the funny thing with structural drawing. So this is your big brother in terms of monthly situation. Hence, the most concentrated parts of where price most likely run away from is here. And then which other one? We have one right here. So all of these are where price will most likely run away from. Price, if price breaks above here, this is like strongest zone. Price breaks above here, we are so much into a bullish trend. So this is for the weekly traders. For the daily traders, well, we can't go all the way back there, to do the way back machine thingy. This is like way back machine. So we can't be doing all of that stuff. But you can start from nearly anywhere. That's the sweet thing with structured drawing. You can start from nearly anywhere. You can start from here and say, okay, you see this very clear high, to this low, to this high. So what's most people will be waiting for right now on the daily, right? What people are waiting for right now is when retracement will possibly start on this particular V that I just drew. Meaning they are waiting for when price will start to trade down for um, weekly supply zones. So in this case, what do we have? We have this weekly supplies demand zone. Sorry, this is a weekly demand zone. Now take note, this is not a demand zone that you will use to trade against a monthly target. This is a weekly demand zone, supply zone, sorry. Oh, sorry, this is actually a demand zone. So a weekly demand zone that you are aiming for with the daily. So when you draw this weekly, you're actually going to aim with it using daily structure. So for example, let's assume price breaks below this low, right? Let's assume price breaks below this low like this and retraces for a retest and then breaks again. So at this point in time, when price retraces, you could now start trading for price to come towards this angle. Now, don't forget, on the weekly, you still have other situations to watch out for. There is this one right here. But the sweet thing about this one is, you could say this. The good thing about this one is this. So, taking my retracements from that high to this low, from this place to this place. The good thing about this whole situation is price already made this move. This is the first imbalance it made. But this imbalance is just, see, is just below the 50% retracement. I think I need to remove all of these other ones here for you to understand what I'm saying. Ooh, that was not the plan. Okay, so looking at this right now, what do you see is you see this start of up thrust in the weekly, right? And then from here, what do we see? We see, excuse me, we see price up, down to this point. We're not seeing it yet. Please, I'm not saying this is what will happen. I'm saying if the price starts to trade below, then you can start to trade on the daily. Price breaks below this low, comes back for a retest, and pushes away again. So you've seen clearly two break of structure, right? Price should do something like this, then you can start aiming for this for a first target, that's a take profit one, and then possibly this for a two targets. So, well, in all of this, we're just trading what we are seeing right now. So what we're seeing right now is price is still crazily bullish, like heavily bullish. Matter of fact, I think price is going to run a little bit more. I think price is going to run a little bit more before it starts to retreat. So usually, usually, right, usually people would look towards, let me add those three levels. So usually some people who trade Fibonacci a lot, right? They will be looking at price to get towards this 1.5 level and also somewhere around these two levels. So they'll be looking for price to make its way towards these levels first before they start to see retracement. And as you can see, it clearly falls into that monthly demand zone. It's like it just falls directly into the monthly demand zone. And that's the sweet thing with the trading. There's a lot of confluence for you to trade with. This is going to be a good confluence. While I'm waiting, let's see if we have any charts. Okay, nobody in the chat yet. No chat. I don't want to miss any chats in case we have one, any questions or whatever. So basically, this market seems like it's still clear for a run, like it's still good enough for another small run. Somewhere towards this 1.824 or 1.95 before we start to see that retracement. Before we start to see lower lows, before we start to see lower lows being taken. That's a higher low, then lower lows structure happening. So we might find that happening around this 1.3. We might find that happening around this 1.5, 1.61, 1.7. That's where we might start to find such situations. So as it is to me, the only thing you should be looking out for in this market is a reason to buy. For now, it's a clear reason to buy, and that is actually being clearly stated here. You see the very bullish structure. It was. I want to just show you guys a little bit of the history of the Euro US dollar market. Over here, you see, since June 4th, right? Since June 4th, the hedge finder had looked at the euro against the US dollar and it has seen extreme bullish situation. With the situation going up, up, and up, and up, even by the day. It came down to 8, and now it's back to 10. It was not even 10 before, it was 9. It came down to 8 and pushed back heavy. Now it's 10, and looking like it's still going to continue till around 11 before it starts to start coming down. I might not be able to use this tool at that point in time anymore. But whenever we see that push, that first push downwards, we start to know, okay, structure has started to change. Time for us to trade for a good zone, for a good demand zone. So basically, what we're looking for right now is a reason to, come into this market. And first and foremost, this is a daily supply demand zone. So we're looking at the closest possible closest zone. So how did I even see this? So daily structure came down, went up. Price is up now, really high, and between here and here. So why am I looking at this spot? Why am I looking at this spot? I'm going to show you exactly why I'm looking at this spot. On the time frame below this 4 hours time frame, we have this. We have this low. Price has broken into it, went back. If price fails to go above this high, right? Price fails to go above this high on the 4 hours, you now have a reason to short this market. So what you are looking for is, let me show you what I mean. If the way market is right here. If the market doesn't go above this, then you don't need to bother yourself much. Just let it go. But if the market does this, you see this new high, this new low here. If price does something like this, and then this, price does this, and then this, just start looking for reasons to short the market to at least this point. You get to a minimum of this point. So it means, I'm not saying you should jump into a trade yet. I'm saying you should wait for the market to give you a reason to. You have a 1:1, and if price continues to print bearish for a while, you then have yourself a roughly 2.5 to 1 here. if price starts to go down. But it all relies on what price does. It completely relies on what price does at this level. So we have this to look out for on the 4 hours. For 4 hours traders, right? Now this is where I can start my own personal analysis and support. 4 hours traders, you have these two areas to look out for. These three areas to look out for. You need price breaking below or above any of this, first and foremost. And price breaks below or above any of this. If price breaks above, you don't have a trade here. You just wait. If price breaks below, for those of you who will be afraid to sell, you need to just wait for price to come. Probably around here, price will do a very similar thing. And then you can now buy. You can now buy here. You can now buy, aim for the supply zone created. So it's going to create a supply zone anyway. If it doesn't do that here, it's going to do that here. Now, I'm not saying it will, like it should do that. If it doesn't do that here, it's going to do it here. So you can start to aim for the supply zones created. One of those two, right? Now, if price, remember it's an if situation. Never forget it's market is not your the market doesn't owe you shit, right? The market doesn't owe you anything. But if price starts to, you know, demolish all of this, price starts to demolish all of this, right? Price starts to, break through this, continues downward. You then start to look for new daily locations like this one here. Start to look for them. So this is it. But when price starts to, seriously break through all of this, you already know we're now most likely heading for, the weekly demand. We're most likely heading for the weekly demand zone. That's just what it means. So again, it's a lot. It's not straightforward, and that's what trading is. But it's also still straightforward because it's quite simple. For those of you who want to trade the 4 hours, these are your looks. For those of you who want to go lower, right? We have people who also still want to go lower. Take notes, that whole overlook applies to this same 1 hour zone. So what are you looking for? You're still waiting for the exact same thing as what 4 hour traders are looking for. 4 hour traders are just looking for candle closes in above or below these zones. You as a 1 hour trader, you're looking for the exact same thing. Candle closes, confirmation. So you are looking for a rejection from here. Yeah, this is what you are looking for. You're looking for a price rejection from here as a 1 hour trader. You're looking for price rejection here. If price should reject this and then it starts to push like this, you're looking for the exact same trade as the 4 hour traders. 15 minutes traders. Now at this point, this is where trading becomes extremely head and mind boggling. Remember, they say scalpers, you have to really, really think as a scalper. It takes a lot to be a scalper because every zone that stands 1 minute could be destroyed the next second in scalping. So, as a scalper, right? As a scalper, what are you looking for? You're looking at clear structure again. Same structure. This is all the euro US dollar. All the euro US dollar. You're looking at straight structure. All of this to me looks like major. All of this to me looks like crazy consolidation. So for me to be clear that bearishness has started here as a 15 minutes trader this is the first one, right? It's already clear in terms of a bearish move for 15 minutes look based on the 1 hour look we've already seen, right? But as a 15 minutes trader though, what you want to see is still very similar to what you're seeing right here. Still very similar. I think this is a 4 hour zone, isn't it? Yeah, that's a 4 hour. This is a 4 hour supply. So as a 15 minutes trader, looking at the 1 hour, right? The 1 hour, the structure is very much the same. Very much the same. It's here, it's here, it's here, to here. I just made that same mistake again. I don't know why I keep making that mistake of not cutting the line properly, but all of this is just the same structure. It's the same structure as this because price hasn't even broken above. So basically, what we're looking at is just this. Allow me adjust this. It's just this run. 15-minute traders, I really don't even see what you can do here because there's so much consolidation here. 15 minutes that you don't know what's happening anymore. And you won't blame anybody for this because it was Friday evening and Friday people are letting out of trades, going out and coming in. People are just coming in for 1 minute, 2 minutes trade, 15 minutes trade, 5 minutes trade. There's a lot of things that could have happened here. So for your clarity, right? For your clarity as a 15-minute trader, unlike the 1 hour traders and 4 hour traders, your clarity is actually here. Should price break below here, start to look for supply zones anywhere in this place. Start to look for supply zones. Price breaks above, like this, then you also continue your usual. Start to look for the demand zones in this area. So I think this is as far back as I can go for the euro US dollar. And I really like the 4 hour setup. It is very easy to pick up. It's clear. Though the 1 hour makes it more intuitive, like a lot more information to give. For people who are trading the dark strategy, this is what you're looking out for. This is the low, this is the low, this is your high, this is your low. You're waiting for this to happen. And then you're waiting for price to come back here whenever it does, for you to then push for it to come here. If this happens, right? And don't forget, for the dark strategy, your prayer remains that this after this first break, the second break doesn't go into the 50% range. The moment it does this, this is invalid. Price coming back here is price tearing you up most likely for those who are trading the dark spread. Well, so that's all for the euro US dollar. Let's see if we have anybody. No charts yet. It's good to see nobody has sent any message yet, still for the time being. So let's head into the next thing we have here on the Edge Finder. I really, really wish I could purchase this tool. If someone wants to finance me to do that, I don't mind. Finance me, I'll purchase this tool, and I'll give you crazy market supply and demand analysis, market structure analysis as many times as possible. So we have the New Zealand US dollar as the next best thing to look out for. To buy, basically. Buy this. So we're gonna go walk into the arena of the New Zealand dollar against the US dollar. And so what's the arena for me? What's the arena? We're gonna start with the monthly. Now remember, unlike I don't like to see the monthly on this place simply because you don't have enough info. NZD, USD, kind of like I like trading view a lot. I can do monthly analysis. Let's just clear the entire space here. All right, so monthly analysis here. Let's begin. This was the beginning of the dinosaur age. This was way back at 2002. But obvious structure, right? Obvious structure we have starting from this. Price made a good run here. Now I would have taken this like this. Actually, let's just draw this structure the way I know most people want to draw it, right? This is what I know a lot of people want to draw. But what you're actually drawing is more like a monthly structure, more like a weekly structure. So all of this to this. All right, so this, my dear, is what most people will want to draw. Let me make that a bit. This is what a lot of people will want to draw. Ish, I don't think it's nice. I don't like the color. Do I just set it back to default? Apply default. Yeah, that is nice. That is visible. So a lot of people want to draw this. But for me, I'll just prefer to cut all these unnecessary in-betweens, right? Here to here. I'll cut all these in-betweens because they are not necessary. You see too many in-betweens. All of this. Price did this. so many in betweens as far as I'm concerned. Okay, these are the only places I see as value these markets on this place. So, in other words, this is my own view of what this market structure is. And guess what? It's not completely bearish to me. It is bearish. I'll call it a 45% bearish market to me in terms of monthly. I know you look at this and you say, hey, Nick, this is bearish, this is bearish. Yeah, it's bearish. It's making lower lows, of course, and lower highs. But, but, I mean, this is a clearest low here, and it's not been taken. And also, this low has not been taken either. So, yeah, it is bearish, but on the monthly time frame, if I am a position trader, I won't see this as a monthly trade. I won't see this as a reason to even place a trade, because right here is is a is a is a it's a beautiful monthly demand zone. It's like a very, very clear monthly demand zone. Price has tapped in once, pushed up, tapped in the second time, third time. So this is actually a weak zone right now. Like literally, this is a weak, really, really, really weak zone. So with that knowledge, right? With that knowledge, I would now say, you see the way my bias is shifting slowly. It didn't just shift, it's bullish, no, or bearish. Nah, I looked at the market first with structure and I said, okay, it is bullish. It is still bullish to me until I see this supply zone do two things, right? Until I see two things happen. First, until I see this amount of taps, one, two, three taps into the zone, and then until I see this, it's still looking to me like a standing structure to a good extent. Though it's not like super standing, but it still looks somewhat standing. And what would really make that stand? Well, I need I need this this low. See this low right here? I need it wiped out. This clear low. The moment it gets wiped out, we're done here. So basically, coming back to the broker side, what I need this low to be wiped out. This is like a major, major, major turning zone. But in between that, right? In between that, I want you to observe this sweet nuance. This is like a very, very vibrant and beautiful nuance for people who trade long term. Some not really like long term, but sweet long term. So observe that this is a zone, and this is also a zone. And now we are sandwiched, like clearly we are heavily sandwiched in between these two zones. Allow me remove all of this. I just want to remove this. So we're now clearly sandwiched between these two zones. And if you draw this star to this star, to this star to this star line, we're currently in the premium. And being in the premium means there's a high tendency, right? There's a high tendency we're going to see price come in here and react. There's also, this is like the highest tendency. Then a lower tendency is that we'll see price come in here, do a little bit of dance, and then break it off. So we've done the monthly overview. I know it's sounding like it's miracles and all that stuff, but we just did a monthly overview here. Now let's head into every other thing that matters, right? Every other thing that matters. What we just saw was this and this. Remember, I like to give it color so that I know what I'm expecting in that area. So big brother, small brother, right? Big brother, small brother. This is where big brother, small brother really apply. On the weekly, we have this, but guess what? Sebasi. This has been utilized You can see it right here. Allow me zoom in carefully for you guys. I don't know if you guys have seen it, but see, this has been utilized. For those of you who trade supply and demand from Bern Skripinski, you know one is to do this. Is to look at this probably um this place, the highs, the close, actually the closes here for precision. So this is your precise, like more precise entry for those who have oh, I think I moved to the wrong one. So the right one is this. Okay, let's just leave it like that. So for more precise entry, your view is more of this. But for me, it has already clicked it a little bit. There's a high tendency it might, reject. So drawing from that point to here, we have lesser view. And take note, we are still in premium. All right, we're still in premium on the weekly. And what do we expect? So what do I expect? I do not expect anything. Why? I am simply watching out for this high. I see candle close above this high in the coming week. Like, I'm not saying that I see it coming. I'm saying if candle should close above this high, it is still risky because we are in, a zone. We're in a very, very strong zone for that matter. Yes, but the most concentration right now is here. So we still have a very, very, very slim chance of coming up to this point based on technical analysis. Take notes. Fundamentals could be crazy. They could take you out there immediately. Based on technical analysis, we still have this point that is very, very possible to reach. But you just need closes, right? You need candle closes above first. So as a weekly trader, this is not a market you should just dive into. This market you should keep your hands folded and wait. For our daily brothers that know how to risk a lot of money on the daily, right? For our daily brothers, well, this was a formal zone and price had performed miracles with it already. So it's no longer a useful zone. Let's look into this matter. As a weekly trader, you have this. And I know you are wondering, why didn't I draw market structure on the weekly? Right? Why didn't I draw market structure on the weekly? It's quite clear. It's quite clear on the weekly. Right? It's quite clear on the weekly that it is still bearish. On the weekly, it is bearish. Maybe I didn't say it out, but let's look at this. Price came from here, went up here, went down here, went up here, and it's currently down here. We don't know if it's going to break, so all of this is considered. Jesus Christ, I've missed this stuff. Okay. We don't know if it's considered bearish, but it's heavily bearish. Again, now drawing the smaller time frame view from the weekly, right? You can actually draw the smaller time frame view. I know you're going to draw this. Most people are going to draw it like that. For me, I'll call this. So we're likely still what? Likely bearish. Why do I say we're bearish? Take away this nonsense, please. This is the structure here. Why do I say we're bearish? What was the last high or low taken? It was this one. This one was taken. So if we're taking lows, what does it mean? Going down. So we're simply just looking for currently, right? The way the market is printing, we're just looking for a supply zone. We're looking for a supply zone to do what? To bounce off up and come down. Unless market then finally breaks above this. So if market breaks above this, we'll then start looking for a demand zone to go up. That's what it means. So when it's going to turn bullish if this happens. It's going to remain bearish if this happens. So You can see this doesn't require much arrows. This, on the other hand, requires much arrows. So, but basically, you can see one thing is clear, right? One thing is actually clear. We are most likely heading here. And now you can see why my analysis simply said we are heading towards this direction more. And hence, the edge finder telling us, hey, the market is bullish. Very correct. It's in line with the technical analysis also. So on the daily, right? On the daily time frame, we are bullish, right? So you can see the edge finder is looking from the daily hand. The daily time frame, we are bullish. Why are we bullish? Well, here is the bearish structure here. I know a lot of people cannot draw that bearish structure. It's the same thing I drew before. Come on. It's this simple. This was a low that led to this high and led to this same high. I don't want to end up drawing too many things on the chart. So that is it. This. You can then now clean the structure into a smaller structure. Smaller structure is, maybe you could call this high. It doesn't matter anyhow you want to call it anymore because price has broken all of them actually. Call it this low, or you can't call it this low anyway. You can call, okay, you can call this low. Let's just call it this low. To this high, to this low, to this high, this low, and this high. So this is, in the 4 hours, this is the structure you will end up finding, like the clearest 4-hour structure you end up. But still on the daily, we're trying to understand the daily nuance. The daily nuance, we're going to look at the very last clear fruits we have here. And this is the clearest fruit we have here, this one. So this, my dear friends, is the daily structure. And with the daily structure, we are hoping, right? We're hoping for price to break this. Like, we're hoping for price to actually do this before it starts to come back here. That's what we're actually hoping for. To be honest, this is what we are hoping for. Why are we hoping for this? So if price doesn't do this and starts coming back here, personally, I'm hoping for this. I'm hoping for this to happen. And this will become taken out. So on the daily, it's quite there, but you don't want to trade yet. You want it to tear above first, like really tear above first before you can attempt. 4-hour traders, 4-hour traders. Ooh, I don't want to delete everything. I don't want to delete everything. I want to delete the parts only. The 4-hour traders, well, right there, you have it sitting right there telling you, hello, hello, is it me you're looking for? Price broke it. Price broke it. Clear structure anyway is up, down, pushing up. Take notes. We're going to draw hard left, right? We'll start from there. No structure, no structure, no structure, or rather no opportunities. There's opportunities here, but it doesn't utilize. No opportunities. Now all of these are clear opportunities, and it started from here. So for our traders, this is it. This is your sweet buying spot. But however, you can see this is what is really pushing price down. Now you can see how on the 4 hours we are able to find a clear reason why price should be coming down. And why do I say this is why price is coming down? I need a clear close below this low. So if price closes below this low, why am I aiming for this low? So on the lower time frame, this is what's happening. And I'm going to show you on the lower time frame immediately. On the lower time frame, I need price to close below this low. And when price closes below this low, I have a reason to trust this market. Matter of fact, I have a reason to trust this arena, these levels to hold. Or better yet still, this level. So if I see a price close below here, well, I can then decide to sit on here and take price here. This is a 2 risk to reward ratio. I don't know what will happen after that. And why do I say so? So we'll go down to the 1 hour to see if I'm correct. On the 1 hour, do you see that smaller time frame structure inside here, I think you should be seeing it already. See that smaller time frame structure? You can draw all these highs and lows and highs and lows and highs and lows and highs, but I don't want to stress myself drawing highs, tiny highs and lows. I'll just dive straight to the high and the clear low. You can see why I targeted this structure now. You can see how clear it is on the 1 hour. I don't want to draw these unnecessary ones anymore. I could aim for this, and you can see price has closed for the 1 hour, right? Price has closed here, and we are waiting for this retest, which price is literally on the zone, literally on the zone, and we want to see price rip below this high, this low, sorry. So what zone am I talking about? This is the 1 hour supply zone. And then if you zoom in, you see what I said? Price is literally touching it. This is 0.60574. And what is price here? Take a look at this low L right here. 0.0510. This is how close price is to that point. Let's zoom in even further by going to the 5 minutes. Do you see how extremely, you see it? Do you see that? Do you see price? See price on this guy? Do you see this guy on price? Look at this high. Take a look at this high. And look at the high. We have 0.0574 right here. Take a look at H, right? And that H is what is here. So 0.60574, and this is it. So price has literally, over the weekend, price has literally tapped into that area. And on the 15 minutes or 5 minutes or whatever time frame you are trading from, looking at the structure here, as a 1 hour, as a 15 minutes trader, as a scalper, you have this opportunity. Let's see if you have a clear opportunity here as a scalper. Yeah, you do have an opportunity here as a scalper. You have this opportunity right here as a scalper. So 5 minutes, 15 minutes, you have this opportunity to place your trade. Hope price doesn't tear you apart here. And oh my god, that is roughly a 4:1 ratio. Wow, wow. You have this first opportunity, but I don't really see this opportunity much. Let's see if there is a better, better risk to reward ratio here on this leg. And how do we do that? We simply pull our fibs. Our fib tells us everything. Our fib tells us that there is no more zone behind it. So this is your best zone actually. This is your best zone to short from. But the market went through weekend. Now this is the new ones. The market has gone through weekend, meaning the market could just open up and be here. The market could open up this evening and price is going to start from here. We don't know what has happened all weekend. You can still see the same market will open up here. So don't place a trade until the market has really opened and then you wait for like a while and see what happens next. So opportunities on the New Zealand dollar, and you can see unlike the trade said to buy. Now for those who wants to buy, I need to show you guys the clearest opportunities you're gonna have to buy. Let me show you buying opportunities. So buying opportunities are the following. Buying opportunities are I don't really trust this because it's like a very small time frame. So on the daily, buying opportunities, you want to see price. You want to see price. First and foremost, like I said, you want to see price break above this high and then start to retrace for this level as a daily trader. If you trade the daily time frame, right? Daily 4-hour time frame, you want to see price come to this level first. For the 1 hour traders, I think you're in the same shoes, basically. You're in the same shoes, waiting for this level. But we still need price, tearing above this level for that to happen. So That to me is all I see here when it comes to what's this? I'm seeing something ICT. ICT. Oh, okay. Oh. Oh, wow. I have forgotten this actually existed. But well, it's all cool. The next thing we have, man, Euro Japanese yen. Let's see the Euro Japanese yen. Let's go. Euro JPY. Oh, it's right here. I've seen it. Let's check out the Euro JPY. Buying opportunities and possible trades. All right. As usual, we can't find a clear show of history here. So we head straight to the one guy that can show us so much history. And that is this brother. First structure. First structure, right? First structure is high, low. Any close above? Yep, there it is. First structure, high, low, high. So last broken situation, right? Last broken is a high. If a high was last broken, then we're in a buying trend. If a low was last broken, we're in a selling trend. So bullish, bearish. So we're currently in a bullish trend. Whoa, bro, has this been ripping? Like, damn, this has been ripping hard. Take a look at this. Take a look at this. Take a look at this. See all of this. It just went like parabolic. Went crazy. Put that on a 3 month scale and you're going to see a reason. That's it. And you might be wondering why I have 3 months, 6 months, 1 year view. It's a 12 months view. That's crazy. Sometimes analysis could take you like to deep places. But on the monthly though, it's bullish, heavily bullish. Now the other clear structure, which is like the substructure within this structure, is obviously this, right? It's obviously this. This is the obvious substructure. For those of you who want to just dive straight into the weekly or daily, I don't even need to force it, right? From here, we can actually see structures of those time frames. Simply just start connecting clear candle closes here. Not really candle closes, but obvious locations where candle did some certain moves. And I think I'll make this bullish. Yeah, this is bullish. So if I dive into the daily, do you see the miracles I just performed? I just performed the miracles of seeing structure on those time frame pretty fast. Right here. Price breaks above. Right, price breaks above. What are we waiting for? Let's look out for zones. Good zones. This is an extreme zone. This is an extreme buying zone. This is another extreme buying zone. All of this. But this to me is the imbalance. This is it here, right here. So I like to look at the candle before the imbalance. So those of you who know fair value gap, I usually talk about fair value gap a lot. So ICT calls it fair value gap. This candle that starts the fair value gap is what I'm looking at. If I say fair value gap, wow, okay, hands off. This is a trade that I just want to wait for price to just do. This will take months for price to do this. Price could come all the way down here or even down here. So whichever one is fine. But first things target, right? This is it. On the weekly, and we already did the weekly analysis there on trading view. Already did a weekly analysis there. Let's go for the daily analysis. Daily analysis is as good as the weekly, right? As good as the weekly. We have last break right here. Push is so strong, so strong. We have another one right here. Surprisingly, on the lower time frame, right? On the lower time frame, this is a break. as small as that is, let me show you. As much as that looks like noise on the daily, it's a clear situation for lower time frame traders. Like it's a very clear situation for lower time frame traders. So on the daily, this this where is the last zone we see? We see this before the impulse, and this is the last buying zone. So for daily traders, there is this zone. That's one. Now we need to do what? We need to look hard left. Hard left, hard left. It has been utilized. It has been utilized. I know some people are thinking it's there. Yes, it is there. There is an imbalance right here, and it has been utilized, as you can see. There's also another imbalance here. This is the one you should be looking at. So there is this, there is this. Is there any other one below that? Let's see. Hard left, hard left, hard left, hard left. This has been utilized. So we've gone so far all the way to the bottom. You can see it has been utilized here. So we've gone so far all the way to that bottom. And well, my dear friends and watchers and viewers, we can't find anything. We can't find anything. So what do we have? We have this, right? We have this zone as the first zone to look out for, the daily. So as a daily trader, what are your targets? What are your targets? Don't forget there is a monthly zone here, and you can see why trading on a broker is different from, like, every broker is different. On this broker, price has literally run into the place. On FX, on Oanda, price has not even touched. Or am I making a mistake? Okay, yeah, on the monthly, price has run into it. So it's on the weekly. Let's see the weekly. Let's make sure our broker is correct. Woo! I am in luck. I am in luck. Nope, I'm not in luck. The price has gotten so close to that point, so not so much. But anyways, it can only be bullish from here to an extent. It can only be bullish until all of this is being kissed and mesmerized and touched and respected or disrespected. Now, however, this is something that you need to take note of. We have this one, and then we have this. So we have two very hefty zones, both on the same time frame inside the weekly time frame. How do you trade this place? Well, critically, from the understanding I have on supply and demand, when price is coming to this very first one, you want to wait for price to first do this. Whenever you have two zones, you want to wait for this to happen. You can never do set and forget when you have this situation. Don't even try set and forget this situation. You want to wait for this to happen here or here, or maybe in between, right? You want to wait for it to happen maybe in between or there, whichever one. But in situations where you have two zones like this, you do not want to attempt a set and forget strategy. You do not set and forget. In fact, you will set and sit down there. That is it. That is what you just do there. But let's see, for daily traders, right? For daily traders, this is not even a good buying zone. It is not a good buying zone. Because if you draw your this star to this star, right? Draw this star to this star. So this star to this star. You're already way into the premium. You're waiting for price to come down to the discount, and then you can then start to hope for the trades to go up. But I don't think price is going to be coming down anytime soon yet. And why don't I think that? Well, it's quite simple. So price has closed above here. Unless price, prints a bearish candle that starts to close below here in the forthcoming days, then just forget about your bearish expectations for you to then buy. Just let the price run. Right? Why do I say so? 15 minutes straight up. 15 minutes traders are looking at this market structure right now. And you can see price has not closed below. They are looking at these two market structure right now. The same situation as what we have up there. They are waiting for these two things. At the same time, they are waiting for if price is going to be bearish, right? The price is going to be bearish for them. They dive into the 1 hour. They have this inefficiency right here. So scalpers, take notes. This is your inefficiency. You have this inefficiency right here, and they are waiting for. This is a good, respectful candle. A new candle close below here, or even here, is enough for a 15-minute trader to set trades and run for this. If price should luckily go into this zone before it starts to do that, right? Before it starts to do that, they'll be watching out for those lows. If price should go into those zones, then they now have even a way better trades to take. They have this. They have this to take. So you as a day trader, right? Daily trader, you have to wait for that whole day to end. You have to wait for that whole day to end below here and close, not just end below here, and close below here. Upon closure below, you are still not setting. In fact, you are not selling as a day trader in this market. You have absolutely no business with selling as somebody who wants to trade on the daily time frame. Your business is you are waiting for those close to happen. Another close. Another close. Geez, what am I doing? You're waiting for these closes to just start happening like this for you. Another close for price to come here. When price does this, it could be 1 day close, it could be a 1 day move, it could be 2 days, it could be 3 days. Whenever price finally does this, then you now start to weigh a reason to, take this market to new levels, which will be this level. That's roughly 1.5. So the reason why we say it's basically of no use in the first place trying to run those markets here at this point. See, that's like equilibrium for that matter. So your only hope basically is actually here as a day trader who trades on the daily time frame, right? As a trader who trades on the daily time frame, your entire hope is completely in this space. It's completely in this one space here, not even this one, this one. So day traders, or rather daily traders, daily time frame traders, you don't have a say here. For 4-hour traders, let's see the 4-hour traders. Do you have any hope? Let's see if you have any hope. 4-hour traders, any hope to come into this market for buying opportunities? There's none here. All the opportunities you have is within the daily zone. It's right here anyway. It's right here. For our traders, this is your opportunity in here. So the difference between you and the daily trader is that you are waiting for, you're hoping for price to do the same thing, right? The same thing. Come in, retest, break above, and then start trading. And then start trading for whichever 4-hour high here or the daily high. Basically, you are just both waiting for the same thing. But even trading this point is still risky as a 4-hour trader. You would want to wait for it to come here. And here you can actually make your set and forget trades, right? As a 4-hour trader, you have the ability to make a set and forget trade on these two spots. So set and forget, go get a life, like Bernd Skorupinski says, set, forget, and go get a life on those two spaces. That's for our traders. 1 hour traders, my dear friends, you are all in the same bucket. The three of you, one, two, three, are all in the same bucket. I don't even need to stress myself much, but let me just show you where your zones are, though. Let me just show you where your zones are. As a 1 hour trader, you can actually short this market. Yeah, you can short this market, but you're not just going to short it like at random, you know. You're not just going to dive and short it. You're going to wait for this. This is your own. So you're going to wait for this. Market pushes below and retest. That's what you're going to wait for. There is a 1 hour zone. Not so strong on the 1 hour for two reasons. Two reasons. One, the imbalance inefficiency is very small. Secondly, the inefficiency has nearly been utilized. This is like equal low. Doesn't mean liquidity is there. I know people say equal low is going to be taken, price is going to take it. Yeah. Yes, there are equal lows there, equal lows here, and price might take it out and then move lower. So this zone is not really a good clear zone for 1 hour traders. 1 hour traders, you can short your market and you can short to this point, but only when this is taking. Right, when this is taking, you're going to come for this point, and wow, that's a 1 to 4. You might not have that chance for a 1 to 4. You might have the chance for like a 1 to 2, 1 to 3. But regardless, it is a lot of money on the table for you to make 1 hour. But take note, it's weekend. Again, the market could open up anywhere. It could open up above, below. So you don't have like a say over the whole thing. Let's see. Oh, I'm seeing Ajani David Tunde on the channel. Thank you very much. I really love the compliment. It is fun having you here. It is fun having you here. I'm going to pin your comments on this particular post, and I'm just explaining the market the way I see it in terms of market structure. I really hope you understand it. I really hope you like it, and this is what I can offer from all the things I've learned in trading. I've been in trading for a long time, but I would just say I've been in trading for almost a year. I've been here before that, but let's just call it for almost a year. Let's just leave it at that. The reason why I say a year is because I've been much recently. So let's head into the next thing the Edge Finder has for us. The Edge Finder says the Australian dollar US situation, and I think I have it somewhere right there. I don't want to open a new chart if I already had a trade there. I think I already had a trade there. Yep, I already had a trade there. Okay, so here you do USD. Straight off the bat, the reason why I took this trade is this high was taken out. Clearly, again, another heavy and hefty high was taken out. This is the reason why I have a pending order sitting right here. Matter of fact, that entire order is coming from the 4 hours. See it? In the 4 hours, I'm taking a precision look. This is a precision outlook, but the general outlook is supposed to be here. So I'm taking a precision outlook. I might not get feeding. I might get feeding. Price comes down here. On the 4 hours, this is the high that I see taking out, and price. We're waiting for price to just do whatever miracle it needs to do on the 4 hours. Waiting for price to do whatever miracle it needs to do. Come down to this discount. Now this is like an extreme discount. Comes down to this discount, and we're hoping. Again, we're not saying the market does exactly what we want. We are hoping that it respects the situation. Take in here. See where I put my stop loss, it gave it enough space, and then ripping out for this high. That's like a 2.3 risk to reward ratio. Well, I don't really care about the risk to reward. It's going to take a long time for this trade to even click in, even if it's going to be like a profitable trade. And it's going to take a very short time for it to close me out if it's not going to be a profitable trade, because price is just going to, it's not profitable. If it is profitable, on the other hand, price is going to spend so much time coming down here and then ripping off. So let's do the clear first general outlook, right? Remove everything I just did. Again, on XNS, we cannot see monthly clearly here. So we dive to the brother that can give us a clear monthly outlook. The Australian dollar against the US dollar on the monthly. Firstly, wow, this is a lot of history. This is a lot of history. So I'm going to turn off the magnet and we're going to just head straight to this. First clear structure I see is this. Boom. The very, very obvious structure here is now bearish. Why? Because the last thing that was broken was a low. Take note, the last thing that was broken is what determines your strength and also the consecutive breaking of that thing. So for example, let's take a look at this zone, for example. The very first thing that was broken here was this low. At this point, you can say it's already bearish. You are not yet sure, but you are 50% accurate that it is bearish. By the time price does it again at this point, you are now setting of your bearish expectation. And what would you be looking out for? You'll be looking out for anything within this area. That is what you'll be looking out for in terms of supply and demand. Now, different strategy tells you it's not going to work like that. There are different ways. They're going to do the MACD, that is the moving average. Some people are going to do the different Fibonacci retracement. Some people are going to do fair value gaps. Follow your own strategy and follow it to the end. This is my own strategy that I understand and I feel is so. If you're watching this, I think you too. So first clear market structure is this. Now we can then squint our eyes into the lower situation, right? The lower situation for me, because I already have a bearish out overview based on what I'm seeing here. I'm now having a bearish bias when it comes to monthly, the weekly, and the daily. The monthly and the weekly. So this is how it works. This is how it works. I want somebody to, if somebody should understand this, there are three grades of um time frame. There's the monthly and the weekly. These are mostly going to be in sync with each other, right? Then we have the then we have um the daily. The 4 hour time frames are usually in sync with each other. After this, we have the 15 minutes and then the 5 minutes. So one thing you will notice is when you are looking at these time frames like this, these are like the three time frames that determines who you are in trading. These guys here, these brothers here, they are the ones we call position traders. These are their time frames that they usually look out for. Then we have the swing traders, right? The swing traders. These are the, oof, what am I doing? Come here. Yeah. So these are the swing traders. These are the time frame they usually actually look at. Now they rarely look at the 1 hour, right? They rarely look at the 1 hour. Now there's a little bit of overlap, and I'm going to explain that overlap here. And finally, we have these brothers, which are the scalpers. So none of them is better than the other. Take notes. All you need to do is to understand where you belong and what suits you as a trader. That's all you need to do. Understand where you belong and what suits you. If you are the kind of person that you do not have the capital to wait for trade, you don't have the capital, you do not have the patience, you do not have the mental withholding to sit down and wait for trade to go days, weeks, possibly a month or two. You don't want to be here. You do not want to be here. You do not even want to come close to this. These guys are the ones that will hold the trade. They are like Warren Buffett. They can hold a trade, enter a trade today, and they are waiting for it to mature somewhere like December. And there's no way you are going to take $100. There's no way you're going to take your measly $100, $200, and keep in the market, and you're expecting like crazy returns. These guys are doing this for a trade of roughly 2 to 3, 4, 5% of their account balance, and those profits are usually running in the hundreds of millions, tens of millions, hundreds of millions. Like, this is the profits made when these guys make trade. Let's just take the smallest amount. Let's just say they are running it for 1 million, right? Let's just say they are running it for a million bucks in profit. Now, if this is 1% of that person's account, automatically, you know what that account balance should be, right? You need to just put 2 extra zeros behind here. And what do you see? You are dealing with somebody whose account, whose trading balance is 100 million. And take note, they won't be doing it on these brokers like you and I. Trust me, they won't be doing whatever they're doing here. They don't give a damn about you guys. These guys, they move the market. These are central banks and hedge funds and the rest. 100 million is like a small trade for hedge fund trader. 10 million naira, 2 million naira trades, $2 million trades. Now, let's divide this into a smaller ways, right? Let's divide this. So, swing traders, swing traders, put that at 100K, 100K in balance. And what are they looking for? They are looking for $1,000 in profits. This is the nicest way swing trader can ever think. And I'm telling you, this is a fact. The lowest they want to see as a profit from a trade as a swing trader is $100. It's not as if they don't see less when the market goes against them. They will see less when the market goes against them. But the lowest they want to see is $100,000. Now, remove 10 from that whole situation. What do you have? You have $10,000, and you are looking for what's $100. That's all you want. So, as a scalper, this is what you should be looking for in profits, roughly $100. But also, this is the sweet thing about scalping. Unlike the rest, you can also remove 2 zeros from this. And as a scalper, 100 $100. Actually, that's 1%. This is the logic. As a position trader, your account balance hundreds of millions. You are hoping for $1 million in a trade, and this is your time weekly. And on very few occasions, right? On very few occasions, you then use the daily for entry. So a lot of them do. A lot of them do. Just ask them; they'll tell you. If you can find any of them anyway. I just said ask them like they're somewhere they're clear. But this is what they do. Now, this is the nuance I was saying I was going to explain when it comes to daily the entry views. For swing traders, all they really need is the 4 hours and the daily. Most times, this 1 hour is simply for precision entry. Most times, the 1 hour is for precision entry. Most times for swing traders. And you all know my channel here, I've been saying I want to be a swing trader, until I started to understand this mathematics. It was all rosy dozy to me. Like it was all rosy to me that like, I can be a swing trader. But bro, I cannot be a swing trader, especially in the position I currently am in life. I do not have the finance for that. So the only thing I can do now is to be a scalper. And what does scalping do? So scalping, this is what they do. You can have $1,000, right? You're just looking, this is the profits a swing trader is looking for. You're looking to make tens of dollars in your short-term trade. And like we just showed here in all this past history, you can see scalping is somewhere very small. In the 5 minutes, and you're just looking for price to run from here to here, or from here. You're just looking for price to run from here to somewhere like here or here, which can happen in about 5, 10, 20. That's like how many minutes? Not up to like 4, not up to an hour, not up to 2 hours. You out of the market. So you stay in the market for that short and you're making tens of dollars. It's a lot, right? It's a lot. Now the thing with scalping is this, right? There is 1 minute precision. There's 1 minute and 5 minutes precision entry. But guess what? This is why scalping is actually much more should I call it? It's much more challenging for the human brain to comprehend. You need to look at the entirety of the dealings. You need to look at the 4 hours or 1 hour. These are your observation zones. Like you need to observe this. Now you can see the differences. These guys up here have to observe very little, very, very little to make trades. These ones you have to observe moderate to make trades. You, on the other hand, you have to observe a whole lot more to make a trade as a scalper. You cannot just dive into the market. Let me just pull up one random chart now and say, okay, this chart right now, as a scalper, I want to trade on the 5 minutes. I'm just going to look at the 1 hour. Yes, you can actually say this is like good enough for you to trade, make trades and all that stuff. In fact, matter of fact, looking at this place right now, all I can see is, I can see, get this out of my face. I can see this zone right here. I can see this zone right here. I can see a reason to scalp this trade already right here. Matter of fact, this is like a reason to scalp. This is a set and forget scalping. But the thing is, scalping is you cannot set and forget scalping. That's the thing. You have to sit your ass down and wait for markets to print that pattern you are looking for. You have to wait for the market to print that pattern candle after candle. You have to understand candle science deeply to be a scalper. So you have to follow that, and then you see all of this. When you see this, you can then enter your trade. Okay, let's say you put in, let's say, $1,000 here. You're risking 1% of your account. You're going to end up making about $28.40 from this trade. That's what you're going to end up making. Now, I see a lot of scalpers wanting to use above the $1,000. It is fine. What this is here for is not your benchmark. It is more like, it's not a benchmark of your maximum. It's more like a benchmark for your minimum. $1,000 minimum. That's why you see those prop firm challenges are telling you, we're going to give you $1,000 account. We're going to give you $10,000 accounts. We're going to give you a $50,000 account, $25,000. You heard them saying it up from the figures of $5,000. Some people even do $2,500. You know, $2,500 like this. Some prop firm give all of this. If you notice, they hardly, right? They hardly give you $1,000. They are a little bit above that and going. So this is the premise behind you being a scalper, a trader. When it comes to the financial end, right? This is not just everything. When it comes to the financial end of you becoming a scalper, a swing trader, a position trader, this is what you need to look out for. Scalpers, $1,000 minimum. Swing traders, you need $100K minimum. And for position trader, well, you need a freaking 100 million. Add 3 zeros to that back, man. You're not ready for what you're coming into. You're not ready. You need this to call yourself a position trader. If you're looking at, okay, let's say you remove one and say 10 million is what you have to be a position trader. You know what that means? It means you are looking to make a profit of 100K tons, $100,000. And I mean, after waiting for about a month, you put in so much amount of money into one trade. So you take a trade here. Let's just assume you took a trade. You took this buy trade here, right? You took this buy trade right here. Let's just assume you took this buy trade here, and you are aiming for price to come to this high, right? You're going to wait for, let's count the bars. Let's count the bars. You're going to wait for 12 bars. That's 84 days. 84 days for your $1 million, your $10 million to produce you 100K bucks. 84 days. I mean, let's look at that logic. You're going to spend 84 days. 84 days. Looking at crazy market volatility and everything. For you to make 100 bucks, 100K bucks. When you invested $10 million, like you have 10 million sitting there 4 days. Logically, for those who have small money, it sounds like, you tried, you made 1%, it's a lot. Your 1%, you made a lot of money, 100K. But the 100K is 1%. You waited for 84 days to make 1% of money. And that 1% is 100K when you had 10 million sitting in a trading account. It doesn't make any sense to me. I don't know if it makes sense to you, but it doesn't make any sense to me. If I had $10 million in a trading account, I ain't waiting for 84 days to make 100K. Instead, I'll still be swing trading. I'll be swing trading knowing fully well that, take notes, this same trade, right? This same trade, if you take it down to the 4-hour entry, the exact same trade. Let me show you the exact same trade. On the 4-hour entry, there is no way you would have waited to enter at this point. Matter of fact, you would have entered at least here. Do you know what that is? That is 4.4. Do you know what that means? You're making 4% of, now this is the logic. This is where the logic goes cab in your head. You're making 4% in that same 84 days if you had this account, this same account as a swing trader, meaning you will end up making what, 400K with the same account as a swing trader in the same time frame. So now you understand the logic of being a position trader. You need a lot of cash, a lot of dough. So this is the logic of swing trading. And I'm sorry to digress, but like I really wanted to put this out. This was very important. I think I'm going to cut this part of the video and make it a separate video of its own. Financial side of, calculating what position you should be in trading. Position trader, swing trading, or scalping. But we've spent a lot of time today. I've analyzed about 3 markets, about four markets now. So let's just analyze the last one, and we'll be off to it. So Australian dollar, US dollar. I think I was explaining the trade I took. So I'm currently here. Okay, yeah. So on the weekly, let's look at it. On the weekly, we have this low being taken, and this low being taken has this high. So why am I not looking at this low instead? Well, I'll call this an invalid structure. I'll call this whole thing here an invalid structure, or rather consolidation. I'll call this whole thing consolidation. Why? Because price has not broken above this high. It hasn't broken below this whole low. So what do we have? We have this scenario. So this, with this whole consolidation inside here, right? We have this. So we're likely going to see a pullback before we see a fall, if price is going to fall, or we're going to see price actually now finally take out this place and then pull back for a retest before it takes off up to a bullish level. That is on the weekly for a position trader. For day trading, day guys, on the daily time frame. Well, now for people on the daily time frame, this now makes sense to look out for, right? This now actually makes sense to look out for as a daily trader. Why? Because you have this, and then you also have this. So this is why market is bullish. Price has just broken above the high. Not really recently, but price has broken above high. So between here and this clear high, we need to go back to the weekly. We need to look for areas where we expect price to start to reject. And the only area I can see here is this. Why? I'm going to do this. So let me explain this just the way Bernd explained it, where I understand it from Bernd Skripinski. You're going to first draw a line up. This is starting from where price is, right? That's where I actually entered the trade. Starting from where price is here. We want to find supply zones. We're going to go above this candle. Now we're going to go hard left. to this point. We don't see any reason to trade. We'll go above this candle. We don't see an imbalance. We'll go above this candle. Go above this candle. Now I have spotted imbalance. So I'm going to come for the origin of that imbalance. When I say imbalance, I mean fair value gap. I have spotted a clear fair value gap right here. For those who don't know what fair value gap is, please, I cannot explain much. This is a fair value gap. So we spotted fair value gap. We're going to look for the origin of this fair value gap, and that is it right there. So you see how we found this demand zone, this supply zone, and this is another video of the zone exactly. So this is how we found the demand supply zone. We're going to apply the exact same tactics to find ourselves a demand zone. So we're going to start from where price is. This is where price is. We're going to come down. This is the candle that ends. We're going to go straight left. Understand? We're going to go hard left. Hard left is this. We're going to hit this candle right here. This candle has nothing to offer. We're going to go down. We're going to continue the journey. And this is an imbalance. The moment we find this imbalance, we're going to look for the candle that started this imbalance. This is the candle that started this imbalance. And we have ourselves a demand zone. So this is how you find supply and demand zone. Pretty easy, pretty simple, very fast. You found yourself a demand and supply zone on the weekly time frame. Take note of this time frame. So this is the weekly premise, right? This is the weekly premise. On the daily, so what does it mean? On the weekly, we are currently in what area? Distal to distal. So the highest to the lowest. We are currently in the premium area. So going down to the daily, we have this structure. Price breaking above this location. So if price breaks above, what does it mean? We are now in a run for a possible uptrend to this level, to this weekly zone. What are we hoping for? Big brother, small brother. We're looking for small brother within the big brother zone. We have, first and foremost, we have this one. Secondly, we have, now this is the thing. I want to do another explanation for you here. We're going to draw this search like this. We're going to draw this search like this. We have this imbalance right here. This is an imbalance. On the daily, this is a zone. But this zone is not within a higher time frame zone. So if you're going to trade this, you need to go and look for a 4-hour entry. That's one. The next thing is we're going to continue this journey. We're going to go hard left to this point. We met the edge of this candle. Come down to this point. We're meeting the edge of this candle. Come down to this point. You can see how we're going. Now there's an imbalance right here. There's an imbalance right here. Sorry, hold on. So there's an imbalance right here, which made me draw up this. Sorry about that. Needed to open the door for someone, which made me draw this zone. Now, we're not going to be drawing. If you are going to understand the way it works, why did I draw this zone? This is a zone of its own. Then we have a continuation here. This is an imbalance. This is not the origin of an imbalance. Why? Because below this imbalance, there is an imbalance. And below this imbalance, there is another imbalance. So what we end up seeing is price does this all the way here. And then this is the final imbalance. Hence, we have these two zones. The rest of this is a show of strength. Period. Point blank period. That's it. So with that knowledge, this is a demand zone, this is a demand zone. What do we do? On the 4 hours, this is what we do. We are looking for 4 hour reason here. So if you're a daily trader, right? If you're a daily trader, you're looking at the weekly. This is the weekly. Then you're looking at this daily time frame, and you're waiting for price to now do what? You're waiting for price to come down here and start to create structure like this for you to buy. If you do not see that structure here, you are then waiting for price to do what? You're waiting for price to do this. You're waiting for price to do this for you to start to buy. It's complex, I understand, but time goes on with me watching these videos constantly, you will understand. Why am I taking this trade I'm taking? It's simple. I'm looking out from the 4 hour perspective. So we can remove all of these stories. I'm looking out from the 4 hour perspective. Now, the 4 hour perspective, I'm very sure you can now draw your zones. This is a zone, and then hard left, hard left, hard left. This is a zone, but I prefer using this. So why am I taking this one instead? If I draw a Fibonacci retracement, I think I already explained at the beginning of the video. I draw a Fibonacci retracement like this, right? So from here to here, I need to see price close above here, which price has done. So on the 4 hour, I'm scalping the, what I call it, the position traders trade. So I'm scalping within their candle for price to do a simple thing. We're scalping for price, we're waiting for price to come down here and push up. Why not here? Why not here? Take a good look at the labels, the levels. Take a good look at the levels carefully. You would notice, first and foremost, this is a premium zone. Buying here, well, that was risky. That is risky. Buying here, this is a discount zone. Now that makes a lot more sense. And then buying even here, that's better than buying here, obviously. And you know it. That's better than buying here and you know it. So let's see how it goes. The 1 hour, for those who want to trade the 1 hour time frame, well, this is a zone for you to look at on the 1 hour for. But is it clearly a zone? Let's see if it's clearly a zone. We have price printing this structure from here, this high, low, high. Now you can see me drawing the substructures. These are substructures. Why am I drawing these substructures? To see what price has really done on the 1 hour. Compare this one to this one.